Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to continue with some intraday technical analysis on certain digital assets, specifically focusing our attention today on AGIX, ICP, and Hbar potential dollar cost average positions that could potentially come into fruition over the next couple of trading days. Now, if you all enjoy these video breakdowns, do us a favor and smash that thumbs up button, subscribe. Hopefully you guys have watched the previous video breakdown so you can see the accuracy of these delta zones that we give to our private CYPRX community. In previous video breakdowns, particularly this one that was updated before the market rallied over the weekend, we saw the Hbar price come up into $11.50, which we called out publicly on the YouTube space to the T of a degree before Hbar started to pull back over the last 24 hours. And then same thing with AGIX. We called out those 57-cent targets, almost touching into 58 cents on the YouTube channel publicly before the price action played out. And those targets were also met. So I got a lot of requests asking if we would continue to do dollar cost average updates and price analysis for intraday positions on these specific digital assets, so we will continue to do so. If you all want to continue with these technical analysis updates, make sure that you guys are following us on YouTube. Do us a favor, smash that thumbs up button. It does help boost the algorithm. I know that you guys get tired of hearing it. I get tired of saying it, but it truly does help. So before we get into the technical analysis today, and before I give you guys some insights into our delta zones and areas of interest that we are looking for here at CYPRX, I always want to start you guys with some value, with some motivation, with some intellectual thinking. So I said to you all on the X space, most people get into trading and investing thinking that the bare minimum knowledge will allow them to get by. It is time now to take a more mature approach and understand that you are going up against the smartest algorithms in the world. And I posted this to you guys. Approaching the gym, as an example, without a plan, not sitting here saying that everybody is a physical fitness, maniac like I myself, but I said approaching the gym without a plan is like entering the market without a strategy. Both lead to wasted effort. Just as you would not hit the gym without a goal, don't step into the market without understanding things like technical analysis, fundamental analysis, risk management, and then also mentality, staying committed, staying focused, and giving it your all. Consistency and dedication unlock meaningful results. Don't waste time on distractions, whether you are in the gym or in the market. So I just wrote an analysis, right? Just comparable to some things that I do in my personal life, which is I take care of my physical fitness. And I created an analogy surrounding trading. You don't want to come into these markets without a plan, which most investors do. They think that they can come into this space, download an application, and just start dollar cost averaging in, and they're going to become multi-millionaires. That is not how this market works. And if you take that approach without any design strategy as to how you enter and exit the market, you will most likely get wrecked. So again, here at CYPRX, we've created an environment for our members, we've created course material for our members, and we've created educational content for our members on how we do that and how we've been successful over the course of our trading career, I myself and some of the other mentors here at CYPRX, so that way the students can tap in, redefine their strategy, and redefine their approach to these markets by taking a more mature approach. Again, not wasting effort, not wasting time. So hopefully you guys take initiative. Now, the markets have slightly pulled back on the day over the weekend. We saw the total cryptocurrency market cap surpass $2 trillion, which was phenomenal to see, an area that it has not been around since prior to the crash that we saw start in 2021 and then in 2022. So the market has significantly recovered since then, but we're not out of the water yet. So I said to you guys, be careful this week. Sometimes short-term bullish momentum in risk assets clouds logical thinking. This is specifically oriented towards the fundamental knowledge and aspect of your personal trading approach. And something that we do here at CYPRX is we track these intraday fundamentals. So this week, ahead of the curve, what do we have set to come out? I said to you guys, data and focus this week, i.e., obviously, of course, paying attention to the rate cut narrative, which we know in previous video breakdowns I've covered for you guys has been driving stock market greed, driving cryptocurrency market greed, particularly in the stock markets. However, there's other narratives right now, like institutional interests driving demand for digital assets, but predominantly it has been the main focus in risk assets, which is the rate cut narrative, that central banks globally are eventually going to start to cut rates in 2024. So that's something that we will be paying attention to. Also, we have this week the FOMC meeting in minutes. We also have US PMI figures for potential dollar strength direction. And then we also have unemployment claims to be paying attention to. Now, if you're not too familiar with how to track these fundamentals, I covered this in a previous video breakdown. A free website that you guys can go to track this stuff is forexfactory.com. Check it out, read through these fundamentals. You just click the little calendar right here, click this little tool. Again, if your main focus is on risk off, risk on market mood, you're going to be paying attention to US dollar fundamentals. And then you can click the currency pair that you want to see these fundamentals come out for. You're just going to click US dollar, apply filter, and then you're going to see the list of fundamentals that come out for this week. This little tab right here is where you can kind of direct your attention to what week you want to be focusing on. Our focus is going to be on this week. And then you just hit apply settings, boom, there's all the information for you right there. I had some people ask, again, remember, ignorance is bliss. And if you have a question, you don't know how to track this stuff, just ask. I personally use the Reuters terminal to get this information a little bit more well put together. It is a lot more expensive and you do have to pay for that monthly. But again, this is the free website where you can go as a retail trader and track this stuff yourself. So anyways, back to the post before we get into the TA on AGIX, ICP, and Hbar. I said to you guys, if we see dollar break above 104.500, heading back towards those highs of around 104.900 that we saw last week due to higher inflation readings, this would most likely create a pullback scenario in the recent uptick in digital assets. If we want to see continued strength in the crypto asset class this week, ideally what we would want to see on the fundamental data front is rate cut hopes still prevailing, driven by risk on market mood, dovish comments from Fed speakers at the FOMC meeting in minutes, downbeat PMI figures, heightening recession scares, increased unemployment claims showing weakness in the labor market, and dollar bearish below 104.300. Okay, so I laid out for you guys what we would ideally want to see a continued or a further risk on market mood. Inversely, if we see continued hawkish comments from the Federal Reserve speakers at the FOMC meeting in minutes, upbeat, healthy US PMI figures showing strength in the US economy, lower unemployment claims, also showing strength in the labor market, i.e. less people filing for unemployment claims, and dollar strength above 104.500, this would most likely prompt a risk-off market mood, weigh on the recent uptick in risk assets, and prompt some pullback opportunities in crypto. So here at CYPRX, we will be following these fundamentals because if we get this scenario, we will be obviously, of course, taking advantage of some potential dollar cost average opportunities if the market is discounted, right? So that's why it's important to be paying attention to this stuff. Now to get into the technical analysis, like we mentioned to you guys, from where we left off in previous video breakdowns, I'm going to attempt to try and do this stuff maybe every other day, give you guys an update or at least 2 updates per week. So make sure that you all are subscribed to the platform so that way you can track this price action with me. And we're going to particularly be focusing our attention on AGIX, ICP, and Hbar. Why those assets in particular? Because those assets in my personal portfolio are the ones that I want to build positions on. So with that being said, if you guys hold these assets, again, tap in, because these delta zones are extremely accurate. So just a couple of days ago, we called out 11.5 cents on Hbar. We also called out roughly around 58 cents on AGIX. Now let's start off with AGIX. You can see via the screen share in the YouTube video that we released, roughly 57.96 was the psychological level that we were targeting. Okay, and the reason why I gave you those levels again was because of the delta zones that we have access to in the CYPRX chat. So here you can see that if I go ahead and I put in the 5796 psychological level, price tapped into that specific psychological level to the absolute T of a degree. And again, our institutional scalper updates these delta zones on a daily and weekly basis for multiple digital assets across the board. Not only digital assets, he also does this for commodities and forex pairs. So if you're interested in this information, before we get into the technical analysis, just head over to cyprxtrading.com, scroll down, click join CYPRX monthly subscription, and you can access our monthly Discord. We have about 100 spots left. They're fading quickly. Our goal was to have only 200 monthly subscribers, and then we were going to cut access to the monthly subscription. That still stands as of right now. So there are about 100 spots open for grabs, right? Now, let's get into the technical analysis. So let's talk first about a prevailing risk on market mood. So that would be, in this case, scenario number one, strength in digital assets, continued prevailing rate cut hopes driven by risk on market mood, dovish sentiment from Fed speakers at the FOMC meeting in minutes, downbeat PMI figures this week, heightening recessionary scares, increased unemployment claims showing weakness in the labor market, and dollar bearish below 104.300, continuing to drive the risk on sentiment. So in this scenario, what I could see is a slight pullback, give or take this week. We're going to stay on the higher time frames, the hourly and above. As long as we're above this bullish leg, i.e. roughly around 28 cents on AGIX, I will remain with a bullish outlook. We have to understand that these markets move in waves. They don't just go in straight up lines for forever like the vast majority of individuals think. So if we're just looking at this previous bullish leg here, okay, where we can clearly see some price manipulation here in this area, some higher highs, some higher lows being created before the market kind of broke out of this here consolidation and ran all the way up into our targets of 57.960 cents, okay? What I would like to see for some better dollar cost average positions is just taking our Fibonacci from these lows, extending it up to the highs where prices started to retrace, and I'd be looking for some discounted positions roughly around the 62% discounted area. Right now, I think that the market is waiting for all the fundamentals that are set to come out this week, and we can see the dates in which these fundamentals come out. So Wednesday is most likely going to be a volatile day in the digital asset space, as well as Thursday. Okay, so Wednesday and Thursday is most likely when these positions are going to start to play out, fan out. We're going to start to see volume and volatility pick back up in the market. I will only be looking to plug capital into AGIX, particularly if we can break below 44 cents to get a further discounted price from this previous bullish move where we ran up into 57 cents, looking for dollar cost average positions, anything below 44 cents. My first target being 41 cents, second target 35 cents, third target 28 cents to come and correct this previous bullish move. Again, looking to get in at a discounted price, not buying tops. If the market does not do either of these things and instead decides to maintain bullish price action above 44 cents, I am comfortable with where my bags are at. Guess what? I didn't fill enough bags down here in this area, and I have to be okay with missing the move. If we do see some type of price action like this, we're heading into, let's say, Wednesday, Thursday, we see some downbeat US data, dovish Fed sentiment, and a continued sentiment that the Federal Reserve is going to cut rates sometime in 2024, driving optimism in risk assets, then I'd be looking for something like this on AGIX, a potential break above 58 cents, and a continued bullish push up into the high 60s. I have alarms set here at these levels for some further dollar cost average positions throughout the week if they come into fruition. Again, it's not guaranteed. This is just me showing you guys how I have built a profitable six-figure portfolio via my long-term bags over the course of the last year and a half, given the bear market cycle that we've been in, okay? ICP. Again, all of these levels that I have on my charts right now are the dollar cost average levels you can see here that are given in our private CYPRX community. So these are the most accurate levels that you guys are going to be able to have access to without any indicators, without any special magic on my charts. It's just straight price action and institutionalized delta zones. So same concept on ICP, right? We're going to start to just run through this quickly to save time. The first area of interest that I'm going to be looking for to start dollar cost averaging into ICP, I have alarm set of anything underneath of $13. Reason being, again, is to come and correct this previous bullish move that you can see here that just took place where we tapped into almost roughly around $15 for ICP. So again, utilizing the same kind of strategy, I don't want to be buying at tops and I want to be buying at least at a 62% discount from the previous move. As of right now, the previous move is 62% discounted. You can see here it's actually roughly around 79% discounted, but I'm looking for a further discount. So I would like to see ICP come back down into roughly around 12.5. If we see that type of price action correcting this entire previous bullish move here, then I'd be looking again to take my Fibonacci from the low to the high. My confirmed discounted price from this previous bullish move, seeing a correction, would be anywhere between $12.50. Anything lower than $12.50 would be an absolute steal, looking at roughly around $12 to maybe potentially even $11.80 to correct more of this previous bullish move on ICP, right? So scenario number one and scenario number two on ICP, let's just cover that in a nutshell, all right? Scenario number one. would be if we can come and correct more of this previous bullish move, looking for a move down into breaking $13 to come down into $12.50 to then reaccumulate some orders and head back to the upside. That would be dollar cost average position number one. Dollar cost average position number two would be if we correct more of this previous bullish move, we break $12.50 and we come back down here into these lows, roughly around, let's say, $12 to $11 highs. Okay. Then I'd be looking to accumulate more orders, look for price to turn around potentially, and head back to the upside on ICP. If neither of these scenarios takes place, again, I have to be comfortable with the fact that I'm making a decision not to buy at a discounted price now, where I just showed you guys that price is discounted from this previous bullish run up into almost $15. So that scenario would play out something like this, where we do see buys accumulate from these levels here, and then we start to traverse higher back into the high 14s, potentially targeting these highs here at $14 and roughly around 80 cents. If that takes place, our next bullish targets on ICP are going to be roughly around $15.60. Moving on to Hbar. Hbar was such a phenomenal call out. I showed you guys on the X space that we have been in Hbar all the way down from 4.5 cents, making call outs to our private community, letting them know that we were dollar cost averaging in at roughly around 4.5 cents. And we have literally been trailing price action ever since then. So in the most recent video breakdown, I gave you guys targets of roughly around 11.5 cents. Same principal concepts on Agix, same principal concepts on ICP. You can see here what I would like to see for some further dollar cost average positions on Hbar is if we can correct some more of this previous bullish move. Something like this along the lines of seeing a failure to break above 11.5 cents, a correction down potentially breaking 9 cents to come back into our first bearish targets of roughly around the high 8s. Okay, so our first bearish target on Hbar is roughly going to be around the 0.884 psychological level. If that level breaks and we see more of a correction from this previous bullish move, my second bearish target on Hbar is going to be the low 8s to come down back into this discounted area here from this previous bullish move. So the first dollar cost average positions that I will be filling on Hbar is again taking my fib from the low to the high. If we can get at least a 79% discount from this previous bullish move, anything below 79% discount, I'll be looking at about 100% discount, roughly hovering at around the low 8s. Okay. Obviously, of course, anything below 8 cents, I will be taking advantage of, but I'll give you guys updates as price goes along. Same principal concepts on ICP and AGIX. If we see an improved risk on market mood, we do not get a pullback on Hbar to correct this previous bullish move. We start to consolidate orders here in this area, and we have another breakout move to target these highs and target these highs here at 11.5 cents. I'd be looking for some price action like this. As long as Hbar can maintain price above 11.5 cents, our next bullish targets on Hbar are going to be 13 cents. All right. So scenario number one would be a pullback down into roughly around the high 8 cents. Scenario number two would be a further retracement, correcting more of this previous bullish move down into the low 8s. All right. Same principal concepts for AGIX. Same principal concepts for ICP. And same principal concepts for Hbar. All right. All just being patient, waiting for dollar cost average positions and paying attention to detail. Now, I do want to show you guys one other little gem that we give to our private CYPRX community before we hop off here. Again, you guys have access to all of this information by joining our monthly Discord. Check this out. Okay. So if we go back here and then go back and look at the dates, roughly on Saturday, February 17th, again, every single weekend, I give an updated list of my portfolio and dollar cost average positions that I'm looking to take on specific digital assets. Here you can see a list of those digital assets. And on February 17th, last Saturday, I mentioned the levels that I'm going to be looking to dollar cost average in at. Well, if we scroll down to the bottom, recent updates are that Quant, Casper, Rose, and LCX dollar cost average levels have all been met, which is the power of being patient, the power of not FOMOing in, and that all these levels were put out at tops. Okay, so remember, we don't chase tops here at CYPRX. What we attempt to do is after the market is rallied, wait for discounted positions to look for further entry. So that way we're not buying when the market is rallying. I mentioned on Saturday when the market was pumping, all of these coins were up at their highs, right? That these are the levels I'd be looking for to dollar cost average in. And so far, the levels that have been met are levels on Quant, Casper, Rose, and LCX for further dollar cost average positions. So again, many blessings to you guys. Hopefully these dollar cost average positions that I just gave you guys come into fruition. I will be plugging some capital in at these levels if they are met. I have alarms set on my trading view charts for notifications to be sent to my phone if these levels come into fruition. And I will give you guys updates as the week moves on. So most likely the next update will be sometime after Wednesday, i.e. after we get the FOMC meeting in minutes and we see how price action reacts. And then maybe potentially even, let's just say Thursday, later in the session, later in the day, maybe I'll make a video Thursday evening to get into price action and see how risk assets reacted to all of the US data and information that's set to come out on Thursday. All right. So again, make sure that you guys are subscribed to the platform, following us on YouTube, following us on our X profile for any further updates, and also following us on Instagram. As always, many blessings to you guys. Be cognizant, be aware out there. None of this is financial advice. These are all levels that I'm personally looking to dollar cost average into. With that being said, I will see you all in the next video breakdown.